Well, I believe the development challenges in Africa are really compounded because most governments, they simply do not have the data they need to make good policy decisions or good decisions about where to place interventions in tax incentivization or development, etc., etc. They really just don't know at all what's happening in their countries.
And how did the central bank dashboard change the narrative?
Well, this evolved. I've been doing various real estate technologies in Australia for 22 years and coming to Rwanda for the last 9 and getting very serious the last 4 years. So we developed similar systems that underpin the Australian economy, which are, property valuation, bank risk analysis, real estate transaction tools. But we did them in Rwanda as pilot projects. And the key for the central bank and the government, the Minister of Finance, to make good decisions and to really know what's happening is to digitize the key economic professions, which are some tax collection data duties, real estate agents, property valuers, mortgage approvers in banks. These are key economic tasks that must be done in a professional way. We cannot let them operate in a grey market. And that, to me, is the single most important thing in developing Africa. Something
rather very interesting about this is that we're looking at a 60 percentage point when it comes to Australia with our property valuation and more conversation on the same data analysis. Africa, it's just 1%.
Not even 1%. If you were to just average Africa, I can speak mainly for Rwanda because we do these real projects here and it's just starting to mature. But the most glaring difference between a developing country and a rich Western country is the use of land capital. Now, Hernando de Soto is a very famous economist who's talked at length about that. But what we've done is make that into an operational project. So in Australia, 67% of properties are used, they're bought with a mortgage, or if they own the property, they will leverage that to buy an investment property, or they'll secure a business loan against their asset, which is their property, and these kinds of things. And there's real estate investment trusts. There's a range of very large financial instruments which feed into that. Whereas in Africa, you use less than 1%, and in most countries, they don't use it. So I don't think that's correlative. I think it's causative. If you fix that problem, you will have Africa's much richer than they think they are. And the only difference between that amount of money and what Africa has is simply a transaction system which we now provide. Well, that's what we've been researching.
Now, that's very interesting. Now, you mentioned something that you've been doing this for 22 years in Australia, quite an experience, but how sure that what has worked there could be easily replicated on ground in Rwanda, in Kenya, in South Africa? How sure are you that this won't be just a one-shoe-fit-all policy, but then something that could actually have positive impact on the data that we provide?
Well, there definitely are some challenges, and we had to be quite creative and inventive. But certainly, there is no pathway to economic success that does not involve those key economic things. There's no economic system that has ever existed that we're familiar with that will deliver prosperity to the majority of people. However, the exact ways that we resolved those problems of corruption, inaccuracy, apathy, people don't want to change, etc., etc., we've addressed that in our project, and I think that the key thing was that we offer that digitization service as a no cost to government. The users must be regulated.
That's exactly where I wanted to go.
Yes.
No cost to government. How do you plan to actually go about the financement of this entire project, if at all it has no cost to the government?
Well, there's an upfront investment by us, obviously, in creating the infrastructure there to deliver a digital service. I mean, it's mostly based around, doing your work from here and submitting to a cloud platform. Yeah. But the government must regulate that anyone who does a property valuation must be a registered property valuer.
All right.
Everyone who approves mortgages must use the digital system to approve it because it's incorruptible. The engineers must be the ones to approve building certificates. These are things that you need. If you don't want that, well, I'm not sure how much we can help you. But if you do digitize those, at the very point that they do the work, I'm approving this or I'm doing a valuation, it instantly goes towards the central bank dashboard. So this is unheard of. There are some key differences there, because not only do you get the data and it's accurate, because it's at the point that they do their work, of which they get paid, which they're happy about, and then you can audit it from the central dashboard all the way back to the original document and the cross-referencing. Now, once the central bank's in charge of that data, they can expose some of that to the capital markets, to the taxation department, to the banking sector, and policy can control all of that.
All right.